Hi there, it's Victor here. Hello, ladies and gentlemen, boys and girls. Welcome to another session of how to grow your wealth. Today we'll be talking about exchange traded funds, which is also known as ETFs. You know, when I started with stock exchange for beginner, then I moved on to mutual fund, then index fund. So it actually makes sense to complete the circle by going to exchange traded fund, which is known as ETF. But that wasn't really my idea. It was one of my vigilant observer who made a comment that, Victor, you've spoken about stock, you've spoken about mutual fund, you've spoken about index fund. Will you be moving it forward to ETFs? So that urged me to come up with this video about exchange traded funds. You know, I create this content as educational only. I'm a technical advisor, not financial. This should just be a stepping stone for people getting into investment venture. So whatever I'm passing over is my passion, it's my experience that I got for all this while within the stock exchange venture. So if you're here for the first time, please consider subscribing. Also press the bell button to be notified anytime I upload a new video. And I think for you to be able to subscribe, you have to log into YouTube with kind of a Gmail, something like that. So to fully understand the concept, I will break it down as usual. We'll talk about what are exchange traded funds. We'll talk about the pros and cons of exchange traded funds. And we'll also talk about a practical scenario. Like we'll look at one exchange traded fund compared with another, and then, you know, when you look at the fund itself, it gives you an idea of how to approach it, and that's really where the money is. So the first section, exchange traded funds. What are exchange traded funds? Exchange traded funds are just investment funds that are traded similar as a regular stock. When you look at it, the name is exchange traded funds. So look at the funds like mutual fund or index fund, and then look at the traded as the process of trading, which is buying and selling. And look at the third section, which is exchange, as the stock exchange. So if you want to do a reverse engineering, the way I will define an exchange traded fund will be funds that are traded in the stock exchange. So you see, I took it the other way around, like a reverse. Funds that are traded in the stock exchange. So that's exactly what exchange traded funds are. They all fall under the family, so it moves like a graph, like a parabola. You start with mutual fund, then it moved to index fund, now it's going to exchange traded funds. The way it works is that mutual fund, index fund, they are all diversified portfolio. So as exchange traded funds, with a little bit of difference. When we started, we said mutual fund was similar to index fund with some difference. The same way, exchange traded fund is similar to index fund and mutual fund with a little bit of difference, which we will talk about right now. Exchange traded fund, the way it works is that since it's also diversified, it also have the tendency to either mirrors a market index or follows a market index. It can also follow different commodities. It can follow the tech industry. It can follow a regular stock. It can follow bonds. It also can follow gold or silver. So on the broad picture, the two types of exchange traded funds are, you have index exchange traded fund and you have sector. And the sector, you can break it down to different commodities: gold, silver, oil, mining. So that's how exchange traded fund works. So now let's move on to the pros and cons of exchange traded funds. Just like I mentioned before, let's start with the pros. Exchange traded funds, similar to mutual fund and index fund in the sense that it's a diversified portfolio also. If anything is diversified, it means the risk is less. It has a less risk just because it's it has more diversity than just a single stock, so less risk. The next pro, it's easy to invest. Easy to invest in the sense that even if you are not advanced level in the stock exchange, even if you are intermediate or entry level, you can still invest in exchange traded fund because it will mirrors or mimic an existing market index, or it will mirrors a commodity. It can check the performance of, just like I said, gold or silver. The third pro is that there is no minimum amount. It's not like mutual fund where sometimes you need like $3,000 to start. With exchange traded fund, it acts like a regular stock. So you just go in this market and you buy your share. If the share is worth 10 or 20 or 30, you buy it. You either hold it long term and make your money, or if you want to do day trading, which is high frequency buying and selling, you can still do that. The next advantage is low fees. The fees are relatively low. As a matter of fact, there are some brokers that even have no commission fees when you deal with ETF. We'll talk about that when we go to the practical example. Very good point. The next, the fourth pro is it's less volatile. It just follows something. It follows S&P 500 or the FTSE, or it follows a commodity. So it doesn't change that much. It's just, it participates in the market. That's the best way. It looks at something, it follows. It's like when you put a fish inside an aquarium and you drop something, the fish just goes around. That's how exchange traded fund is. It's not going to try to beat the market. It's just moving around, following. It's always attaching to someone. So that's why it's always good to, when you try to pick your fund, make sure you pick the best one which you know it will perform. Because if it's not performing, your exchange traded fund will also follow it underperform. And then last but not the least, is very volatile. Anytime you want to sell it, you can just put in your order, submit. Within a couple of seconds or couple of minutes, someone will just buy it right away. So that's how it works. So now let's go to the cons. The first cons of an exchange traded fund is that if you by some means mistakenly buy a fund which underperforms, let's say you buy some fund which you did not do your research well, you just jump into the market, just like I mentioned, investing in any venture without you knowing about it is like trying to cross a highway with fast moving cars. Eventually you will crash. So make sure you pick a fund that you know about. Look at the holdings, the company within that, to make sure it performs. Because what happens is that if you pick a fund and it starts going down, which in the stock exchange is called the bear market, like a dip, nothing can stop it. It's just going to go straight down, like going down a valley, because there is no active manager, especially when you're doing it yourself without a manager. It's just going to continue to go down until when the market picks up, it will start coming back up. So it will go down and then start coming back up. That's a disadvantage, because all it does is it tracks something. The other cons, which I still don't see it that way, but is that it still comes with some fees, especially when you decide to do it yourself. Even if it has no commission fee for you to get in, when you buy and sell, which is trading, anytime you trade, there is what they call the load fee. You trade front end, you buy back end, you will still have some fees while you're doing the trading. Sometimes you have like a $4.95 or a $5.95 anytime you buy, and then anytime you sell, the same thing. So it's like a round trip. And then the third is that you have to put a little bit of research, especially when you want to do it yourself. You want to research, know exactly how the market is performing before you buy and hold, or you buy and do the trading yourself. That also, to me, is not really a con, but not everyone wants to be reading graphs and data or doing, research to know the PE ratio or the PB ratio. So those are the pros and the cons of the exchange traded fund. So now we'll be talking about the practical example. So to do that, because these are live, we have to go to some live websites. So to do that, we're going to hop over to my desktop. So follow me along. So right now I'm right at my desktop, and we already spoken about the ETF, which are exchange traded funds. The reason I'm coming to my desktop is just to show some practical scenario. We'll look at some example and see how, if they're dividend paying or if they have commission fees or whatnot. So the website that I will be going to, I'll go to Questrade. Questrade is an online Canadian broker. So I'm going to go to Questrade first, and then I'm going to go to the powerhouse, Vanguard. So we can look at some of their funds, their exchange traded funds. When it comes to ETF or even index fund, it's always advisable to buy a fund that comes with dividend yield. So there is dividend payment. For those of you who are not familiar with what dividends really are, think of it as when you buy, let's say you buy a house within the mortgage system, and then you rent it out. So your house will make money in two ways. There will be appreciation, which is capital gain, like equity. And then if you rent the house, you also make money, by making rent. So when you give that house out, equity and rent. Same thing with stock. When you buy a stock, as time goes on, the stock appreciates. So that's equity. It makes money. And then if they pay you back what is called dividend, which is kind of a profit that some companies will pay back to their shareholders for being loyal to them, then that's considered a dividend. And report shows that dividend is the safest way to grow your wealth, because it's just going to keep coming. You're making money by appreciation. You're also making money by dividend. So let's hop in. We'll start with Questrade. So right now I'm on the website of Questrade. It's live. I can stroll. They have different types of ETFs. I am on the page of the self-direct investing, which means you do it yourself. And I'm a big fan of do it yourself. You buy and you hold, or if you're not so knowledgeable or experienced, you can always hold it for a long term. You don't necessarily need to do daytime or high frequency trading. But what I want to bring into your attention is, I'm right here on Questrade. Look at their website. It's time to switch. No account opening fees. So no account opening fees, no annual RSP fees, no TFSA. TFSA is tax-free savings account. Tax-free savings account. So they also have a tax-free savings account, which is good because you can just have that account with them, and then you have a dollar cost averaging where you put money into the account regularly. You can do a $50 in every month or $100 in every month. Then low commission. They have pretty much low commission. And then they also have ETF commission free. So you buy your ETF with commission free. When I saw that, I was amazed. Like a Canadian broker. I mean, is Questrade trying to pass a message out there that they're trying to be a Canadian leading broker with no fees, like the likes of the Robinhood or Betterman? Well, it's a good question, but you can find that out. I'll leave a link below of this main page where you can go in. When you click on the link below, it'll take you to this page and you can browse. They have a very friendly website. That's why I like about Questrade. But the fact that you buy ETF with commission free, that's what really, amazed me. And then now let's move on to one of their portfolio. Again, I'm not even logged in. I'm just browsing on their website. It's not like I'm logged in or into any account. So I found a portfolio which is either actively managed or you can do it yourself. You can do your trading yourself. They have different performance. So they have aggressive, growth, balance. So I went to the aggressive to see how it works. And what I also noticed is that they have a dividend yield of, starting from 2.19%. That also intrigued me. Normally, dividends will range from a 0.5 or a 0.8 right up to 3. But on the most part, even the big guns in the stock exchange business are within the 1.95, some 2. But when I noticed that Questrade, they have a 2.19. That also was a kind of an eye opener for me. So I took note of that. So we can scroll down. This is pretty much, these are the holdings. So when you look at this ETF, it has Spider, which is kind of an index ETF. It matches the S&P. There is iShare, which deals with bonds and stock, bonds and stock ETF. By the way, iShare it's kind of a trademark of BlackRock brokerage. So yeah, so that's pretty much what I found. I found out the app and look at the growth. I don't want to go in depth on the returns because when I logged into my account on some other videos, I'll be able to go in. So the two takeaway from Questrade, 2.19 dividend yield. That's very good. I know there are some experts, watching my videos, experts who are my audience, which I really appreciate it very much for you to stick around till the end. So 2.19, isn't that a good rate? Yeah, just leave me a comment down below and let me know. I know sometimes there are some funds that might go right up to the 2.93, but for a 2.19, I think that's great. So now let's bounce over to Vanguard. Yeah, so Vanguard also, they have a Canadian high dividend yield index fund, which kind of the FTSE. Again, FTSE, it's Financial Times Stock Exchange, which is traded in the London Stock Exchange, just so you know. Okay, so let's come to the performance or the overview. So when I checked it here, I noticed that they have a trailing yield of 4.12. They have a distribution yield. Distribution yield is kind of an annual, so it's like an average of the annual dividend payment. So this is also a dividend payment you can go through. So they are also doing good. They have a management fee of 0.20%. They have a management expense ratio of 0.22%, which is also good. Their holdings are mostly Canadian companies. So we'll scroll down to their holdings so you can see. So top 10 holdings, you have Royal Bank of Canada, Toronto Dominion Bank, Bank of Nova Scotia, Bank of Montreal, you have Canadian Imperial Bank, Sun Life Financial. So those are the companies that are in this particular ETF. Yeah, so if you are in Canada, you want to invest in a dividend paying, this is one for you. So now let's go to another Vanguard. Another Vanguard is Vanguard Dividend Appreciation. When you go through the overview, I noticed they have just a 1.85 dividend yield to start from. The last time I checked, it was like over 2%. So I was surprised. I just said, let me bring it up. I'm doing this live, so it's what is happening right now. If you go to their website, that's what you will see. And if you scroll down, it will give you all the summary. You see all the holdings. They have Microsoft, they have Visa, Walmart, Johnson & Johnson. Those are some of their holdings. And you can see all their performance on the website. So that's pretty much. I just said, let me just bring 3 examples to share. And you can take it from there. Again, the stock market, everyone have their perspective. I might be interested in more tech company. You might be in fashion or food and nutrition. It's just like 3 people go into a store, and when 3 of them are coming out from that store, there are chances. I mean, the probability of them coming out with the same merchandise is very difficult. One will come with a shoe, a dress, or a wristwatch. So that's how the stock market is. So this brings us to the end of this video. If you find it valuable, please comment, share, like. Until then, I will see you on the next video. Have a nice day. Bye-bye. Thanks for watching, and please don't forget to subscribe.